All right, our next guest says that given the amount of stimulus about to course through the system, it's going to be a minor miracle if there isn't at least an inflation scare this year. Joining us now is Jason Trennert, chairman of Strategas Research Partners. Yeah, a lot of stimulus. We've almost gotten to a point, though, Jason, where it's almost a show me that it actually has an effect. The rates are going up because the economy is reopening, but no one really thinks, because of MMT and other things, we're sort of lulled into thinking that inflation is not going to really be a long-term problem, maybe just a blip. You think we're wrong?
Well, I don't think we don't know naturally, and the Fed is telling us that it's going to be transitory, and I think very much like it's an opposite bookend of what Volcker told you, which he was just focusing on one part of his mandate, which was price stability in the late 70s, early 80s. Powell is telling you they're just focused on full employment. And so, but, in the lead in here, Joe, you were talking about gas prices being up 25 cents. There's no question, in my opinion, that you're going to get tightness. Labor market's still got some ways to go. But if you're looking at commodity prices, you're looking at just the amount of money teed up that we know. There are very few things that are gimmies in this business, but we know that you're going to have something probably in the order of 8 to 10% nominal GDP growth in the economy this year. It's virtually a certainty unless there's some other exogenous event. It's just hard not to see there being inflationary pressures with that kind of money going through the system.
So you feel like the market is getting accustomed to the idea that long-term rates will move higher, but you also point out tech stocks, because of they're already trading on some lofty terminal values, and that's the ones that when rates go up, they could be affected. Is it going to be a problem, or is the market getting accustomed to the idea of it?
Listen, Joe, I think there's nothing more normal in my opinion, in the middle of the cycle than having rates and stocks go up at the same time. I do think, though, that the real money to be made, or the alpha, as we talk about, to be made, is really going to be more in sector rotation and stock selection than just overall just beta, just being in the market. I think tech has had an incredible run at those stocks. Not only are they trading at pretty lofty valuations, I would say that they've been unusually benefited by the pandemic, and as the economy reopens, there's going to be other choices for investors. And I think this move towards value, in my opinion, it has legs. I think the move towards small caps, I think that has legs as well, which is to say you've been in the desert for 11 years. It doesn't seem likely to me that this is going to be kind of a 6-month or one year phenomenon. This could be with us for a while. The hard part is, of course, what do you do for an encore? And you're hoping this will be a test of supply side economics versus priming the pump versus Keynesianism. We'll see what happens next year, whether you'll have enough to sustain the kinds of economic growth into 2022 that you are providing for in 2021.
Well, the piece in the Journal is about how we pay for what we already spent, or what we're spending, the $1.9 trillion. But also talking about maybe an infrastructure bill. That could be reconciliation. That could be big, too. We're going to pay for that as well, I guess. So none of these things, when do these things bother you as someone that probably is not totally enthralled with higher taxes anywhere, whether it's corporate taxes or, no, I don't know, a wealth tax or raising marginal rates, capital gains? Where are we going to do it? And why is that not going to be a negative next year?
Yeah, no, listen, I think if you look at the President Biden's campaign materials, it was all of the above as far as taxes. I mean, I think Elon was talking about it. It was everything. It was income taxes, it was estate taxes, small business, capital gains, dividends, corporate taxes, the whole thing. The one thing that is going to happen is you're going to have to raise the debt ceiling. So regardless of whether you have a bill on infrastructure, which in my opinion is a near certainty, you're also going to have to raise the debt ceiling. So, which would suggest that you're going to have tax increases. Now, the amount of the stimulus in the system right now is probably enough to overcome that. But as time goes on, I think what is interesting is we've talked about the presidential election cycle in the past. The last 2 years of a Biden presidency could be more challenging from an economic perspective than the first 2 years, which is usually presidents like to do it the other way around. This is a very unusual circumstance where they take the medicine early and they let the economy rip as they're going into re-election. And this time, because of the circumstances of the pandemic, it could be quite the opposite, where it might be very difficult to get some of the stimulus and other things, the goodies that you give away to get reelected might be difficult as you approach 2024.
Shepard Smith here. Thanks for watching CNBC on YouTube.